Hey everybody, what's going on? It is James here with Crypto Common Sense, and I have your Bitcoin/cryptocurrency update for January the 17th. Before I jump into the content for this video, please do me a huge favor. Go ahead and hit that thumbs up button. Don't forget to subscribe to the channel, and also don't forget to click that bell icon to get notifications when I release new updates. So the first thing that I want to talk about today is this line. Now this is the line that we talked about in yesterday's video that I was waiting to see if it was going to break. It did not break. It rode on that darn thing all day long. Last night I thought that it was finally going to break, and instead it ended up basically pumping up off of it. It doesn't even look like it was near breaking, but the reality was it was pretty close. This is actually a chart that I was watching last night. I was getting ready to get excited. I was waiting for this candle to close, and you can see that RSI peaked under that line. I was like, okay, here comes my short. And then it just said, nope, head fake right back above that line it went. So that was a bummer. Ended up going to bed and woke up this morning to see that this thing had put in some beautiful bearish divergence on the 4-hour, which would have made for a great trade. I didn't get it. Obviously, I was sleeping. But we had a high over here, we had a higher high here, we had the red candle confirm it, and then of course we had a much lower high in RSI. So that would have been a pretty easy 2 to 3% trade. I think about 2% is what it dropped. And we see here that RSI is once again coming down to the same support, and so far it seems to be finding support on it. You can see we've got a tail kind of starting to develop, and this is a 4-hour candle that closes in 25 minutes. So if this closes like that, I don't know. I really don't know what to think, right? I would have expected this thing to start dropping by now. So I don't know if it's just doing their, I don't know if the market makers are just doing their damnedest to get people sucked into this and to really convince them that this is a real bull run, or maybe this is a bull run, right? The weird thing about this is even in a bull run, this should be retracing, right? At least back down to, I would expect it to retest, the 61.8 fib on such a parabolic move, right? If we get rid, actually I don't want to get rid of that, but if we start looking at just how parabolic this move actually was, and we start drawing some Fibonacci levels, even if we draw them from 6,800 and not 6,400, this was basically not a sustainable type of trend, right? And if we look at it, that 61.8 is now down around 76, 79. So I would still expect it to come back down there at some point. When? I don't know, right? I don't know. Like I said, it's taking longer than what I would expect it to, and it's not necessarily a good sign for bears, okay? The 200 moving average on the 4 hours down around that same area, so maybe we get a retest of that. Hard to say, okay? Right now, I'm in the same short position that I've been in on Bitcoin, that small head short that I took out around 82, 85, I think it was. So, obviously it's underwater, but it's fine. It's no big deal because my alts are pumping, and that was the whole purpose of that short. Was I took out a small short on Bitcoin. It didn't cover the alts, but the alts have pumped quite a bit, 10, 15, 17%. I don't know where they're at now, but they were 17 or 18%. Whereas I'm down just a small amount on the shorts. So I'm pretty happy with the way things are working out. Still bearish, right? In fact, if you guys didn't catch it, you can check out my TradingView profile. I posted a pretty in-depth look at why I'm bearish. I'm not going to go through it in this video, but essentially you can see my entire thought process here. I just lay out the entire similarities, right? The monthly bear divergence that's happening now, same monthly, not monthly bear divergence, but the monthly bear cross in MACD that's happening now versus 2018, same type of cross. We're getting the same type of RSI. We're getting the same break of the 21-week moving average. We're getting it's 27 bars since the last high. In July of 2018, it was 27 bars from the last high. RSI looks the same on the 3-day, right? We had the same basic price pattern playing out here, okay? Which is the inverse head and shoulders followed by a pump, followed by consolidation, followed by another pump. So we have that similarity going on. We have the hidden divergences going on. We have the retest, the bearish retest of the 200-day moving average. And, the timeline, it was about 220 days from the top in 2017 to this pump in the summer of 2018, the false rally. And again, it's about 202 days, well, 203 days now, from the pump in 2019 to where we're at now. So just a whole lot of similarities, and I still feel like it's very likely, I don't know if you can see this very well, but it's very likely that we're probably going to go down, at the very minimum, down to the 200-week moving average, which is down around our trend target as well. Okay, so you can check that thread out, a lot more detailed. I'm not going to do a whole video on it because I talked about it a lot yesterday. So that's kind of what I'm seeing on the 4-hour, just watching this line, right, with a lot of interest. If we change this over to a 1-hour chart, see if we see anything. We'd had this line yesterday that I talked about, saying that it almost looked like this was a bullish retest right here, and that's exactly what it was, right? Yesterday's morning's video talked about this being a bullish retest. The price was down around $8,600 or so, ran all the way up to $9 grand, so that's about a $400 pump. And if you were brave enough to take that trade, you could have got about, I don't know, about 4.5%, something like that. Would have been a pretty good trade. I didn't take it. Okay, I didn't trade at all yesterday, really. I mainly worked, I was just doing some coding stuff, which I'm trying to brush back up on my coding because I have gotten rusty. Not that I was ever that good anyway. Okay, but hourly, just, I don't think it's really time to go short again. I think we got to wait for the break of some of these key levels. I would have liked to have taken a short position on that divergence, but even if I had, I'd be looking at closing it now, at least half of it, to take some profits and pay myself. This all looks like a pretty steady little uptrend going on. How far does this go back? It's not perfect, but got a little bit of an uptrend on the 1-hour, right? I care more about the 4-hour uptrend, okay? All right, so here's our 200. We did indeed come up. We didn't quite touch it. The 200 moving average was 9,065. You can see that we basically just came up shy of it and moved back down. So this is what I've been waiting for, is a retest of that 200, or is what I was expecting. We're kind of getting to the point now. I don't know what this alert is even for. I never set that alert. We're kind of getting to the point now where it's make or break. If this thing breaks above this 200-day moving average, it's going to be very hard to be bearish, okay? It could be a head fake for sure, but typically in Bitcoin's history, that's not how it goes. One thing I've been looking at a little bit more lately is I've been saying that I felt like 9,500 was the level that I was interested in. If it broke 9,500, I would go bullish because it was this weekly high back here. Starting to kind of second guess that a little bit. I've been watching this monthly high, right? If we can close above this level, that's a monthly high. I almost care more about that than the weekly. And it's actually a little bit lower. It's down around $9,159. Now, I don't mind if we slip above it on a wick and come back down, but if we close above that level, I don't necessarily think I need to wait for $9,500. I think I probably need to go ahead and shift gears and say, you know what? That's a higher high on the monthly level. This downtrend is probably over. Okay. So going to watch that, and the danger, we just need to be very honest here with ourselves. The danger in this is if we expect this to confirm a bull trend and then suddenly pull back and let us in, that doesn't always happen. That actually is what, that's one thing that I did in early 2019 that I wish I hadn't done, is I was a little too bearish, right? I had my spot Bitcoin, I had my alts, I had all that stuff, and it was fine and dandy. I had bought some all along this way. I bought some near the bottom. It was great. But I still had about 30% of my portfolio in fiat when this run started. And when it pumped up to $5,000, instead of going long, I decided to be cautious, and I was waiting for a pullback to the $4,000 level so that I could get in, and it never pulled back. So I missed out on quite a bit of money that I could have made if I would have just longed it here and wrote it up. But I didn't long it. I just waited. And you got to be careful about that, because while it quote unquote should retrace and should let us in, there's no guarantee that it is going to do that. We don't know how high it's going to go if it's a bull run before it retraces. So I am watching this, and I'm being very, very cautious about how bearish I am, because I'd rather pay, and again, I'm not at this point yet, but I'd rather pay, $8,500 or even $9,000 for Bitcoin, have it drop down to $8,000 and keep going up, than wait for that pullback to $8,000 and then watch it go up to $15,000 without me. Okay, and that's not a FOMO thing. It's just literally a risk management thing. I need to have spots so that I can trade the alts and things like that. So I don't want to be too picky about my entry. If we're in a bull trend and I feel like we're in a confirmed bull trend, I'm okay being underwater a little bit because eventually it's going to go back up if we're in a bull trend. Okay. The exciting thing is, and I don't think it's time to talk about this just yet. I think it's just kind of an idea. But the exciting thing is if this thing does turn out to go bull, right? It means I was probably wrong about this being one big downtrend. Now, why is that exciting? Why would I be, happy to be wrong? Because it means that it's very possible that this is actually a big uptrend, which I've been saying all along is not what that is, right? I don't like that idea. I don't like the concept that we moved up for a couple of months, retraced for 6 or 7 months. Doesn't really look like a normal uptrend, right? But if it is, it's pretty exciting because if you stick it on a log chart and start looking at the extensions, that would actually mean that just plainly going by the extensions, nothing else, that would mean that the next trend target would be up at $28,500. And it doesn't give us a timeline, but I would say that would be something that we could look at as early as next year, right? If this is indeed an uptrend and I've been wrong this whole time. I haven't been wrong about this being a downtrend. It's obviously a downtrend, but I've kind of felt like we were in a macro downtrend, right? Something like this, or at the very least, something like this, where this was going to come back down here and then move up. Other people have felt like this was actually an uptrend and it was going to do something like this and then move up, right? Doesn't matter who's right. If I'm right, I'm going to make money shorting it, and I'm going to be able to accumulate more Bitcoin when it goes lower. If I'm wrong and it starts to go up, I'm going to end up with a little less Bitcoin, but I'm still going to be happy because it's a good sign that it's probably going to put in a new all-time high at some point. Right now, I'm not so sure that's ever going to happen, right? I just don't know what effect the futures are really going to have on this market. And anybody that says they know what it's going to happen, they're lying. They don't know. They don't know what's going to happen. No one does. We have no data to go off of. Okay? So that's kind of what I'm seeing on the monthly chart. It's a little exciting because, again, if it's an uptrend, we're looking at 28.5 as a target. If it's a downtrend on a macro level, we're looking right around 2,200 as the macro target. Doesn't guarantee we'll get there. I think it's entirely likely that we will not get there, right? We could see it find support down around 5,500, which is the 0.5. We could see it find support down around 4,400. Maybe put a tail in to fill in this gap. The 61.8. Maybe it stops at the 78.6 at 3,200 and retest this bottom. Right? We don't know. Okay, this is just basic trend targets and nothing more. So that's kind of the monthly chart. Let's look at a weekly and 3-day real quick. Not a lot's changed, guys. I went pretty in depth on Bitcoin yesterday, so I don't want to beat a dead horse. This is the 3-day chart. Do not like the way this candle is starting to curl back up, right? See how this one came up and then just came right back down? This was looking like that yesterday, but with this little pump, it's starting to curl back up. Don't love that, right? As a bear, that's not what I want to see. Also, one thing I want to mention to you guys, it's very important in my mind that I watch the top of this box, okay? Because even if this curls down, if it starts finding support here, I'm going to think that's a pullback in a bull market. And I'm going to think that it's going to bounce off of it and that it's not going to come back down in this area. I want to be very clear. It might come down in the box and do like a head fake, right? It might come down like this and then come back out of it. But if it comes down in the box and starts consolidating in the box or moving lower, that's still bear market territory. And what I would expect to happen is I would expect for it to eventually dump out the bottom of it and have a capitulation event like we did in the last bear market. The one if factor, the one X factor, if you will, that makes us a little bit different from back here in 2018 is you have to remember that this whole, year-long bear market cycle, this was after, basically 2 years of an uptrend, like a really strong uptrend, right? Almost 3 years, really, of just powerful uptrending prices. So there is some question in my mind, are we going to get the same year-long cycle when our uptrend was so much shorter this time, right? And we don't know the answer to that, but it's entirely possible that we don't. It's entirely possible that, I'm basing these fractals off of this timeline, but that on the macro level, the picture is different. And I don't mean it's possible the picture is different. It is different, right? It's 100% different on a macro level. So we have to be mindful of that and not get too arrogant or too stubborn in our bearish analysis, right? We'll wait. We'll see where this candle closes. It's going to close in basically, a little over a day from now. It's going to close on the 19th, which is really the 18th my time. So got about a day and a half left, and a lot can happen. And if you look back at the July pump, very, very similar structure, right? Very, very similar. You had a bunch of green, and it played around up there for about a week before it finally dumps. So if we take a look at a weekly chart, our RSI is still inside of our bear market zone, but it's really, really pushing the upper limit here, right? It is just sitting right at that resistance, which really isn't that surprising because it's also sitting at resistance with that 200-day moving average. So if it pumps through that 200-day moving average, it's also going to break through the top of this box. It's also going to be putting in a higher high on the 3-day RSI. It's just going to be bullish, guys. I don't think that I can hang on to a bearish bias at that point. I'm going to have to flip. Could I be wrong? Could I be getting sucked into a bull trap? I could, right? But that's just the risk we run with trading, right? We've got to trade with the chart saying if it pumps any more than it's already pumping, got to concede defeat, right? And go with the bull camp. So this, again, closes in 2 days. We don't know what's going to happen. A lot can happen in 2 days. One thing I pointed out yesterday, and I'll just remind you again today, in case you didn't see yesterday's video, we have not put in more than 2 green candles consecutively since this downtrend started. So if this closes green and next week is green, again, I think that's a bullish signal, okay? But I do right now, I still think it's going to be a red week next week. Again, not only because we haven't, ever put in more than 2 green candles in this bear market, but historically, if you want to go by history, January is not a green month, it is a red month. Every single January going back to 2014 has been a red candle for Bitcoin. 2015, 16, 17, 18, and 2019 were all red candles. So it would be strange that here we were in this downtrend for 6 or 7 months, this bear market, and then suddenly January pops up as a green candle for the first time in the last 6 years. Okay, I think it's just one big fake out, and I think they're doing a really, really good job of making people nervous, right? Making the bears very, very nervous, and bears are probably closing out. A lot of bears are probably closing out short positions right now, myself included. I'm not closing any short positions, but I'm being very, very cautious about opening any, and that's kind of the whole goal of a market maker, is to trick the retail traders, people like me, right? People like you. They want to trick us into doing the wrong thing, right? Maybe right now we should be longing the hell out of this and we're scared to long it. Maybe right now we should be shorting the hell out of it. We're scared to short it. It's kind of in no man's land, right? So that's kind of what I'm seeing on Bitcoin. Let's jump over to Ethereum. I haven't looked at any of this stuff today. I just crawled out of bed a little bit ago. I got to bed late last night. Went to bed early but didn't get to sleep. So this is our Ethereum chart. Same lines. Hasn't really changed, right? Same exact picture we were looking at a couple days ago. We're underneath the 200-day moving average on the weekly chart. This red line was, the key level of resistance that it wicked up through, but so far it has not been able to, stay above that line. I think if it can close above $169, that's a good signal that there's probably a bull run coming up on Ethereum. Okay, so that I'm not even worried about RSI or anything. That's the level I would watch, $169. A close above that on the weekly would be bullish in nature. Okay, if we look at Litecoin, oh goodness gracious, Litecoin has busted through this little level here. Still not a higher high, but that was the level that was kind of holding it up. Right here is the last higher high. It's up around $63. That's the level that Litecoin needs to break through to technically be out of its downtrend on the weekly level. Okay, if we look at a line chart, it's real easy to see that. All right, on a monthly level, it's really already there. Right, if you want to count this as a high, it was $58. So if it closes above $58, I don't know. Maybe somebody wants to get bullish. I'm probably not going to. I'm probably going to wait for a close above $63 personally. Okay. When I look at the 200-day moving average on Litecoin, it's up around $65. So again, maybe this is going for a bearish retest. This is an awful big pump, guys. It's an awful big pump. If we look at it, it's up. Currently, it's up about 66% from its bottom, and it topped out right around 69%. I'm not in the habit of chasing down assets that have just pumped 69%. I'd much rather either wait for a pullback, or I'd rather just miss that boat altogether. Okay. And when I say altogether, I won't miss it forever. Eventually it will pull back. I just don't know when. Okay. And I can look to get into a pullback once there's a confirmed uptrend, even if it's, much higher, right? Again, if it breaks through the 200-day moving average, that's bullish, right? And I may look at taking a long position. Does it suck paying 65 instead of paying 36 like down here? Sure, right? But trading is all about risk management. It's like I used to play poker for a living before online poker became illegal, right? I can't tell you the number of times I folded the winning hand, right? But sometimes you don't have the information available that says I'm for sure going to win this hand. So risk management dictates that you fold and live to play another day. Trading is the same friggin' way. You're going to miss a lot of trades. You're going to miss way more trades than you take, right? Or you should be missing more trades than you take. If you find yourself taking more trades than you're missing, it means you're probably over trading. Okay. So that's what I'm watching on Litecoin. On EOS, I sold some of my EOS, 20% of my EOS last night. Decided that I was going to go ahead and take some profits on it. It looks strong, but you know what? Cash in the bank is always nice. And since I don't believe in this uptrend on Bitcoin, then I thought I'm going to go ahead and take a little, nibble on my profits, because if Bitcoin dumps, I think EOS will dump with it. And not necessarily, to new lows. I'm a little bit less confident about that. I'd still like to see it go down to about $2, but EOS has already broken its old high, right? So it's already, unless this thing just completely dumps before the week closes in 2 days, it's already put in bullish structure here. It's already got a higher high. So why would I be taking profits on it instead of just writing it? Well, because what I'm looking to do on EOS is a little bit different, right? If this is the level, 358 is the old high, which means it's old resistance, it could become support. So if I'm selling up here around, $3.80, $3.85, I can buy back at 358, and that's a huge gain, right? I'm going to be able to buy back, I don't know the exact number off the top of my head, but, roughly 8 or 10% more EOS than I sold. That's how I increase my positions instead of taking the cash gain, right? So let's say, just for easy math, I sold 100 EOS at, again, easy math, say I sold at $4, right? Well, if I bought back 100 EOS at $3.58, it's like, okay, well, you made $42, right? You bought the same number of EOS back, but you got $42. Woohoo. That's not what I do. In a bull market, I put all of it back in, right? I take out enough to live on, but the rest of it all goes back in. So if I'm selling at $4 and I'm buying back at 358, again, this is just easy math. That's not the exact numbers I'm using. Then you're looking at a difference of roughly, just say 10%, which means that now instead of having 100 EOS, I can buy back 110 EOS. So essentially what I'm doing is I'm taking my profits in the altcoin itself, and then let's say EOS goes up to its old high, which was around $24. Well, 10 times 24 is $240 profit on that trade, right? So in a bull market, I want to accumulate coins. In a bear market, I want to accumulate fiat. It's a totally different trade strategy. Okay, so that's why I took profits. Also on the daily chart, this thing is obviously very, very overbought, and it's just riding along up there, consolidating. It looks like distribution to me, and the 200-day moving average is way down here around 343. So I wouldn't be surprised to see this thing pull all the way back to the 200-day moving average, even if it's in an uptrend. Okay, if we look at the gains on this thing, it got all the way down to 214. I had bids at 204, so that's kind of a bummer for me. Got down to 214, pumped 89%. That's obviously parabolic, right? It pumped 89% in a month. Okay, so what happens after parabolic climbs? Typically what you see, not always, but typically what you see is a retracement to at least the 61.8 Fibonacci level, which would be $2.88. So all those reasons combined, that's why I took profits on EOS. Now, it's not the same thing as a short, right? A short is something where I'm putting in an exact stop loss and I'm trading a setup, etc., etc. With EOS, I didn't have an exact stop loss. I had a rough stop loss. I said, hey, look, if this thing closes around, above $4 and looks strong, this is like an internal conversation. If it closes above $4 and looks strong, I'll go ahead and pick it back up. That was kind of my conversation with myself, right? But it wasn't exact. It wasn't like I went to bed with a stop loss in the thing. And if I had woke up and it was suddenly $15, I wouldn't have bought it back. I would have said, okay, well, I made money, cool, on to the next trade, right? So it's not like a short position because there's no stop loss. There's no price that I have to buy it back at. If it just goes up too much, I can say I'm not going to buy that back. I'll put that money somewhere else. Okay. But that's kind of what I'm seeing on EOS, is it's definitely overextended at this point. Okay. Also, it's got some bearish divergence coming in on it. If you look right here, to here, and right here to here, that was bearish divergence. Okay. That happened about the same time Bitcoin's did. So, if Bitcoin pumps up, this thing's probably going to keep pumping. If it dumps, it's probably going to dump. It's just kind of, it's the way it works. Yesterday we talked about BSV in the video, and I talked about this head and shoulders. Also talked about this W. Hopefully somebody made some money off of this, right? I said it was trying to put in support on this neckline, and then if it found support, it might pump. Well, it did pump. I didn't take a trade or anything, right? Just kind of, it's funny because I see all these trades and I'm like, oh, that might do that. That's kind of cool. And then I don't take them. It's like, hey, dummy, take the trade. Pumped about 12%. Would have been a damn good trade. Actually, it wasn't 12%. From the low over here, it was about 10.9%. So assuming somebody got in on the close of one of these candles, maybe they got 5 or 10%, maybe 5%. It says 8% from close to close. You never get it perfect. But I could see a 5% trade in there. Right now, it looks like it fell underneath it, and it's testing the neckline, so that's kind of bearish in nature. So looks like it's starting to downtrend here a little bit. This is hourly, right? So it's not like a huge deal. Let's see. Well, it found support there, so that's not downtrending. No, it's just kind of ranging. Okay. Looked like a downtrend, but I eyeballed it wrong. I mean, maybe this is going to be a level that's important. Don't know. It's just when it's moving sideways like that, sometimes it's better not to try to get in there and get chopped up, but just to wait and see what happens. That yellow line is important. It's a line of support, which is now flipped to resistance. So if it starts to move down, the level that it needs to hold is going to be this level down, right around this level here, about 280, 281. If it loses that, it might come back down all the way down to the 200 moving average down here, which would be rough. Let's look at a 4-hour. Oh, I forgot this thing had pumped this much. Yeah, this is definitely not. Whoa. If you look at that, this is putting in a giant M. Okay, so if it loses this 280 level, that's really bearish in nature, and it may go down a lot. Okay, if we look at fibs on this thing, get a daily chart on it. So this is the fibs, basically a month-long fib levels, and the 61.8 is way down here at 222, and the 78.6 is down here around this area of consolidation at 158. The 200-day moving average is down at 126. So, yikes! I wouldn't be long in that thing, that's for sure. What else we got? I think that's enough, right? Where are we sitting? 30 minutes on the video. I feel like I got a little bit rambly today. Probably should have sat down and looked over charts before I started shooting the video. I wasn't even sitting at my desk for 2 minutes before I turned on the recording software. But hopefully you guys got some value out of this. I mean, I don't know if you can tell from my voice or not, but I mean, it is what it is. It's just business as usual, guys. There's nothing to really panic about. It's going to do what it's going to do, and we'll just trade, what it gives us. So far, it hasn't really told us what it's going to do, right? So far, it's just kind of playing games and trying to keep us on our toes. I really don't know. I don't know which way it's going. I just know that right now, there's no confirmation that the downtrend is over, and so I have to trade what the charts are telling me. It's just the way it works. I will leave you with one last thought. It's really easy to forget about this because it's been a couple of weeks and we've moved away from it and all that kind of stuff. But there are still gaps on this chart down at 7 grand. Look at this. Right there. That never got filled in. That's $7,006 is where that gap lives at, right? So if we drew a box, which is going to be hard to do on a 5-minute chart, but if we drew a box there, I mean, look how far away from this we've gotten, right? I don't know why my scale's messed up like that, but way down here is that gap, and that is roughly 20 to 21% from where we're at right now. Does it have to fill? No, it doesn't have to fill, but it's there. And there's also gaps in the CME down around 7,600. So you can see it on the hourly. The gap's even bigger. It's down around 6,900. See right here. I don't know, guys. This is just not convincing me. Maybe I'm too stubborn. We'll see. All right, so with all that being said, remember, I am literally some guy sitting in a spare bedroom, so nothing in the video is financial advice, nothing in the video is trade advice. You should always do your own due diligence and seek out professional financial advice before making any type of investment. If you enjoyed the video, please be sure and give it a thumbs up. Don't forget to subscribe to the channel. Don't forget to click the bell icon for notifications. And of course, don't forget to check the description for links where you can follow me on TradingView, Twitter, and where you can join my free Facebook group. This is James with Crypto Common Sense. Trade safe.